This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, June 18th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals studio. Let's talk precious metals. We had an extraordinarily active week last week as our president met with the leader of North Korea and looks as if they may have come to an agreement as far as a potential denuclearization of North Korea, which in many people's eyes is very positive as far as geopolitical uncertainty is concerned. So that may have been one of the variables that affected the price late in the week. Then we had the Federal Reserve raise rates by 0.25%. And many people may have missed this, but they raised rates by 0.25%. But they only raised the interest on excess reserves by 20 basis points. And this really kind of changed the overall thinking in many of the top technicians' minds as far as what could be about to happen in the near future as far as the money multiplier effect is concerned. If you look at the money multiplier, this is the number of times that cash turns over. And we have been trading at an extraordinarily low level, well below 1. A matter of fact, going into the financial crisis, typically we traded somewhere between 1.5 to 2.5. But after the financial crisis, the money multiplier effect dropped all the way down to 0.6%. We are now banging up against resistance right at 1. And the fact that the Federal Reserve only raised 20 basis points on reserves may be a signal that the Federal Reserve is ready to start pushing the banks to start lending out their money instead of parking it in the Federal Reserve where they're collecting interest. This could change the money multiplier effect, and this could change the dramatic situation that has existed that many people just can't understand. And that is the fact that we have pushed an amazing amount of capital into the market, which is the definition of inflation, the increase in money supply, but we haven't seen any inflationary pressure because that money has been stagnant. It's been sitting in banks. And if that starts to change, look out. Then inflation could be right out on the horizon. What we saw last week is we saw silver rally from 1640 all the way up to 1737. Gold rallied from 1288 all the way up to 1308. But late in the week, when we announced tariffs, we saw both gold and silver drop precipitously. Silver pulled all the way back to an intraday low of 1645, and gold pulled all the way back down to 1278. The 400-day moving average in gold sits at 1272. Many people look at that as a tremendous buying opportunity. The low close in silver sits at 1618, and many people look at that as a tremendous buying opportunity. The bottom line is, do we have inflation out on the horizon? Was the Federal Reserve's signal a key signal that changes the way you should look at the market? What you need to do is give us a call today so we can talk about how precious metals can fit into your portfolio. Thank you.